All but 6 of the Hudson Bay stores have begun selling off their inventory. Here to tell us what we can expect and if you can snag any good sales is Retail Analyst Doug Stephens. Good morning to you.
Good morning.
Okay, let's talk about what's next for the Bay.
Yeah, sure. So as you may recall, last Friday, the company came out of court. They had an approval to move forward with their liquidation. There was some wrangling because initially the company had appealed to the court to allow them to liquidate all 80 stores. And that was then revised to keep 6 stores open. There are 3 in Ontario, 3 in Quebec, that they're going to keep going. And I think that was because creditors were saying, hang on a second here, if you liquidate everything, there's a good chance we're not going to get paid back all the monies that were owed. So the company agreed to keep 6 stores open, but everything else is going to be liquidated. And that started just this week.
And let's talk about those liquidation sales. What can people expect if they're going in? Are there any good deals to be found?
Well, there may be, but what we have to keep in mind is that in any situation like this, where a company has applied for bankruptcy, there's a court-appointed monitor. In this case, it's a company called A&M Canada. And the monitor's responsibility is actually to try and maximize the value of the assets that are being liquidated. So as it applies to inventory, they're going to initially be trying to get as much money as they possibly can for all those goods. Now, that's not to say that over time, they're not going to start to mark things down. They will, in all likelihood, but it's very possible that some shoppers are going to go in and see higher prices than they might have expected.
Okay, interesting. Let's talk about those 6 stores that are staying open. Are they safe?
No. The short answer is no. The company certainly has, in the interim, agreed to keep these stores open as revenue generators. They've sort of cited the fact that these stores tend to be outperforming others in the chain. But they also made it very clear that as this liquidation goes forward, if there is no financier that comes to the table, or if there's no one that comes out of the woodwork to buy the company, then it's very possible ultimately that these 6 stores too could fall into the liquidation.
And do we know why Ottawa wasn't chosen to keep one of its stores open?
You know, I looked for whatever rationale I could find, if there were some sort of commonality between these stores. The only thing that I can see, according to the company, is that these stores, these 6 that they've chosen, tend to be stores that are outperforming in the market. Whether or not there's some other hidden logic behind the choices, I can't say. But for the time being anyway, I guess we have to go with the story that these are the revenue generators that they see in the market.
And let's talk about the downfall of the Bay. What do you think led to this downfall of seeing this company, go under?
Yeah, I think we're talking about a number of things, some of which were external to the company, things that were really affecting everyone in the landscape. Obviously, the prevalence and the pervasiveness of online shopping has taken a strip out of just about every retailer. Mall traffic, we know, over the last couple of decades has also suffered. We're just not going to the mall the way we once did. And department stores typically were also very much focused on sort of the mid-tier of retail for a middle-class consumer. And we're seeing behavior amongst consumers now polarizing between luxury and discount. So all 3 of those things have hurt them. But there's also been a really defined lack of strategy. I think we'd all agree that the only strategy at the Bay for about the last 10 years has been discounting, and that tends to be a race to the bottom as well. So when you put it all together, here we are.
Perfect. Thank you so much for joining us today.
My pleasure. Thanks for having me.
You're welcome.